Hey, this is Brad Gill at Next Home Lifestyles. Welcome back to a market update for the city of San Jose. It is the week of May 2nd, 2022. Let's get started. What are we seeing out there? We're going to take a look at statistics going on right now for single-family homes, condominiums, and townhouses within the city of San Jose. So for starters, our current active inventory, it's really starting to rise. So we're up to 672 units available for sale, the highest amount we've had for active inventory. So to break it down for you real fast, what does active inventory means? It's right now the current snapshot of how many homes, condominiums, and townhouses are available for sale or under active status, meaning they're on the market and they're being promoted and marketed so that any buyer can come through and make an offer on those properties. Now, the important thing to note is that this active inventory encompasses everything listed today, everything listed for the last 7 days, which we're going to get to here in a second, as well as if there's a property listed last month or the month before and it's still active, hasn't received offers yet, it's still being counted. So it's our total available inventory. Now, on the demand side, our total pending count is going down. We're at 729 units currently pending. That means these homes were active and they have since received an offer. So now it could be any stage before close of escrow. So it could have gone under contract today, last week, week before, month ago, but it hasn't made it to closing table yet. So it's a really good snapshot of exactly where our demand is in comparison to the available inventory. Good news is inventory level is definitely going up and our demand level is definitely coming down. So we're getting into a much more balanced market, but the absorption rate is still very high. So even though we have a lot hitting our market right now with inflation and increasing interest rates, our market around here in Silicon Valley, or at least in San Jose, is definitely still very strong. All right, now let's take a look at the trends. How is the market likely to perform over the coming weeks? We're going to take a look and see new listings over the last 7 days. We had 323 listings hit the market. That is slightly down from the previous week, but still that's up from where we were a month ago. So the more listings we have, the higher active inventory level is going to go, the more choice buyers you're going to have, and hopefully our price appreciation or all that upward pressure on pricing we've had this year is going to start slowing down a little bit. Demand trend. How many homes went under contract over the last 7 days? So we had 323 listed, but only 187 went under contract. So again, that's showing you, as you can tell, the demand is slowing down. Inventory is starting to outpace that demand. So as we head into summer, which is again our seasonal pattern, or at least I should say in normal years, our seasonal pattern is we have a lot more inventory available for homes that go under contract. We're starting to see signs that we are starting to make that shift. Market expectations. So over the last 7 days, we had 21 homes expire or come off the market. Again, not a significant number in comparison to our total active inventory, but to note that there still are properties that don't sell or for some reason are being pulled off the market. Price changes, we had 86 over the last 7 days, roughly almost 13% of our active inventory. To give you an idea of why we track this particular number, we tend to find a balanced market is going to have closer to about 30% of the properties out there undergo some sort of a price change as opposed to 12.8%. So again, just showing you that all the statistics of the market are still saying that it is a very strong market in favor of sellers. So we'll continue obviously to monitor the numbers and give you guys the insights behind it, but you can expect that total multiple offers are going to start slowing down. So instead of seeing 20 offers on a property, maybe you're going to see half that. And where the property actually sells for, probably not going to continue to see 20 to 30% above the asking price. It's going to start coming down and being closer to seasonal averages. But the big news, as always, is what's happening with our affordability. So 30-year fixed rate mortgage at 5.1% stayed flat from last week. So a payment on $1 million loan is getting to about $5,400 a month. What we are going to see is as interest rates continue to rise, we're going to see a lot of our inventory get stuck in what's called a locked-in effect. And basically what that means is, as rates continue to go up, homeowners that would normally sell their property and move up into a bigger home or move down are more likely going to stay in their home and make the changes necessary to that home to fit those lifestyle changes they're looking to make, rather than buy, because they probably have a 30-year fixed rate mortgage fixed at under 3%. And they definitely don't want to trade up to one that's 5 or 5.5%. So even though inventory is rising, rates are rising, we would otherwise think that, that inventory should keep climbing, some of those sellers are just not going to come to market. So overall, we still expect lower sales across the entire year because a lot of sellers may not be moving. So there's still a lot of pressure on prices, and there's still a lot of pressures on buyers when they're out there looking at properties. All right, guys, I hope this information is helpful. I'm Brad Gill at Next Home Lifestyles. Thanks for watching another market update. Hope to see you guys next week.